action. Drummers, are you ready? Okay, and cue the trumpets. And with that, ladies and gentlemen, please put your hands together and welcome our host and presenter today from FarnsfieldResearch.com. Please welcome
Everybody, my name is Brandon Fargo. I'm head of the individual accounts here with Farnsfield Research. I want to thank everybody for joining us today, and I'm excited to see that we have a ton of people on here who are interested in the turtle option strategy, which, just so you know, has been helping a lot of my clients already in their own accounts and with their own trading. Whether you're already trading on your own or looking to learn how to trade or follow along with a highly experienced trader like Russell Sands, this strategy will be perfect for you as it's been tried and true over the last 40 years. So a lot of people over the last 10 years have said that trend following is dead. Well, I can assure you that it's not. And I'm about to show you why, and you're about to learn why in the next 45 minutes. So again, thank you everybody for being on. A little bit about me. I grew up here in San Diego, California. Went to school here as well. And after I got out of school, I started working with my family in the restaurant business, real estate and development. We built a lot of homes, commercial buildings, did all of it on spec and did quite well for a long time. Unfortunately, I learned the hard way about diversification and having all my eggs tied up in just one or two investment vehicles, and that was being real estate. So I moved out of real estate, and I actually knew one of the owners here at Farnsfield and started working with them and the traders that we represent. What I will tell you is my eyes were opened along with many doors to endless possibilities, and now my mission is really to help people around the world and share my experience and different opportunities and with people just like you guys sitting in this room. So obviously everybody in this room is here for a reason, right? I can tell you that we have searched and searched for traders out there, and it's an extremely long, drawn-out process. But the benefit of working with a company like ours is we've actually gone out, done all the due diligence, and are aligning people like yourself with traders that most importantly are real, and the strategies are real, and actually making money in these markets and under the current market conditions, which is what we all really want. We want a strategy that works and we can depend on, and we don't have to go back, and we all just want to make money. So let's get into it. First things first, most of you are probably on here because you're looking to make a living at trading, or probably aren't there yet, or trying to find something that's going to add on. But basically, we all just kind of want to get out of the rat race. Well, what I'm about to show you has been working for over the last 40 years successfully. And if you want to walk down that path with us and Russell Sands, that can become true for you as well. I'm sure you've all heard of the turtle traders. Basically, I'll give you guys the Cliff Note version of it and how the strategy has been implemented over these years. Basically, back in the 80s, there was a famous futures and commodities hedge fund manager. His name was Richard Dennis. Richard was famous because he had taken a $400 family loan and turned it into a couple $100 million within a short period of time. I think it was about 4 years. He believed that you could take anybody off of the street, no matter what their background was, and you could teach them how to trade successfully. And his partner disagreed with him. His partner's name was Bill Eckhart. And he thought that Richard was an anomaly, that nobody could come close to what he had done, and that nobody would ever be able to learn and trade successfully, or at least as well as he did. So what they did is they made $1 million bet, and they brought in, put out an ad in the Wall Street Journal, and they brought in 15 people, or hired 15 people, and 14 of them showed up on the first day. So the one guy that didn't show up, his loss, right? But they stuck these guys in a room across the Chicago Board of Trade for 2 weeks and gave them training, and then handed them each $1 million to trade with. Okay. Now they called these guys the turtle traders because they were actually having this argument in front of a turtle pond in Singapore. So after the 2 weeks, they handed them the money to trade with, and every single one of them made money. There was not one person in the group that lost a single penny. I mean, they saw the ups and downs, but they all made money, and actually a tremendous amount of money. It was so successful that they ended up hiring another 10 people the following year. But Russell Sands, who we represent and who has developed this strategy in the options, was actually one of those original 14 traders. Now, after about a year and a half, Russell has been, or started his own hedge fund, and has been trading on his own ever since. He trades futures, commodities, Forex, stock indexes, and now the option strategy. He's got a real impressive background. Before he was a trader, he put himself through NYU and he has an MBA. He was a cab driver in the Bronx. That's how he made money and put himself through school. And then after he got an MBA, he actually became a backgammon and blackjack player professionally, and has written books on how to count cards. He actually isn't allowed to step foot in a casino in Atlantic City because he's written those books. It's pretty funny. But the point of me telling you that is he's a numbers guy, and he's actually extremely smart. Like I said, he left the group after about a year, and has been trading ever since. Now, originally, it's important for everybody to understand that the Turtles method was geared towards the futures and commodities markets. And about 15 years ago, Russell developed the same type of strategy in the foreign currency markets, which is very successful. That averages well over 90% a year. And then 5 years ago, decided to go into options and ETFs, okay? And that's what we're going to be looking at today. We're going to go over some of the key strategy points. We're going to look at the entry strategy and how he's determining to get in and out and then manage the risk while we're in those trades. Let's go ahead. Let's go over some of the key points. And if anybody has questions, please hold them till the end. We're going to be able to get to everybody, hopefully. And if there are any other questions that we don't have time for, you guys will have our contact information. You can contact our office and speak with either myself or one of our team members here. But we're going to go over the orders here in a second, Matt. So don't worry. Okay. So how is it traded? All right. We have about 4 key strategy points that I'm going to cover. It has a defined entry strategy. Okay, which is extremely important. A lot of people out there, a lot of traders out there go on a feel or a whim, or they have somewhat of a strategy and it's not really defined. This is a very simple option strategy. He's buying directional calls and puts, and it's all based on a breakout which is created in the market, and then following that trend in the market for as long as we can before the expiration of the option. So where this is going to differ from his futures and commodities program is that with that and the Forex and really any individual market, we're fighting against time, obviously. And if any of you have traded options, you guys well know that. So since we're fighting against time, it's really about getting in, capturing a small profit, and getting out, or creating those singles and doubles, which when we go over the performance, you're going to see that it does. What he's looking for basically is a higher high or a lower low to be created within a 21-day period, okay? Once that new high or that new low, well, if it's a new high, we're going to buy a call, obviously, and we're looking for the trend to be established. If it's a new low that's created, we're going to be buying puts, all right? So you will be able to take advantage of both the upsides of the market and the downsides of the market. And this can be traded within an IRA, okay? So the strategy itself is 99% linear and mechanical. meaning we enter on price, and there's never a question of whether you should or should not enter the trade. The only discretion that is involved, which Russell will help you with and takes care of, is the open interest on the volume. Obviously, you don't want to be trading in markets that are traded extremely thin. Usually, you'll be able to find somebody who's going to sell you the option, but finding somebody on the buy side when you want to get out, if it's a thinly traded market, may not be there. We buy puts and calls at the money or slightly out of the money. Okay, so we're looking at basically at the market and 4 to 6 weeks out of expiration. Now, just because we're 4 to 6 weeks out does not mean we want to hold these all the way till it expires or goes to zero. He is looking to get in and out, and the trailing profit target on this, which I'll go over here in a second, is actually extremely tight. We look for a tight spread. That way, you know, even if we are dealing with limit orders or an exact price, we don't want a wide spread, and we want cheap options so we can purchase multiple contracts and not have our risk really outweigh our reward. Next, we're going to go over the money management. Russell never risks more than 5% on any trade. And is never in more than 5 trades at a time. Okay, so he doesn't ever want to hold excessive risk in any market, no matter what's going on. This is not gambling, and you know, this is again where 90% of traders go wrong. They don't have money management rules set for them, no matter what is going on in the market. So he doesn't like to over leverage things. He's actually, even though the returns are pretty tremendous, his money management is actually extremely conservative. The risk management that's involved, okay, which is our third point here. Russell uses the average true range to determine his risk or pain threshold for every single trade. And basically what the ATR measures, if you're not familiar with it, it takes the highs and the lows over a certain period of time, okay? And that way we know what the personality of any given market is. You know, I might buy a call on XLF today and have my risk set, you know, at, I'm just going to use round numbers. Let's say I've got it set at $200. But 6 months from now, if I don't need to hold $200 worth of risk because the ranges are a lot tighter, then I'm not going to. So, I mean, we do have a max risk, and that is the premium that we're paying, but that's not necessarily the exit strategy, okay? At times, if we're down in a trade, let's say we're down 50% on the option, and I'm saying on the option, not on the overall account, but let's say we're down 50% on the option, and we're getting closer and closer to that expiration date, Russell's going to cut that trade short rather than on a hope or a prayer that it's going to come back to even or possibly even into profit. He doesn't mind taking small losses. We all know they're going to happen. The key is to have your winners outweigh your losses, which this strategy's got on average about a 3-to-1 risk to reward ratio. As far as the exit strategy goes, it does have a defined exit strategy, or excuse me, we're on portfolio diversification, sorry. Russell uses a trailing portfolio diversification. So Russell looks at about 35 different ETFs, okay? Now, that doesn't mean you have a possibility of being in 35 trades at a time. Again, the most you'll ever be in is about 5 trades, but we are looking at a variety of different sectors, anywhere between retail, technology, emerging markets, you know, metals, currencies. There's about 35 different ETFs that he's found that the Turtles method really works well on. The big thing is the open interest, getting back to the volume like we were talking about earlier. There may be times where some of these sectors are highly traded depending on what's going on geopolitically or fundamentally around the world. But we want to make sure it has a high open interest, a lot of volume on the daily volume being traded, and that's why he narrows it down. What that also does is it allows you to be able to replicate and mirror exactly what Russell's doing with his money. So no matter whether you've got a $5,000 account or $1 million account, you're going to be able to take the exact same trades that Russell does. So it'll just be a difference in what your allocation and how many contracts you're doing. As far as the exit strategy goes, he uses a trailing stop. That stop loss goes into place right away. And when you're a subscriber, you'll learn the calculations, or you can have this done automatically for you at a third-party broker, and they could execute on your behalf completely hands-free. But there is a stop loss that is put into place, and that will trail the price of the market as the market continues to move in our favor. Also, if the option increases in value by 100%, that stop is going to get real tight against the price of the market. To answer your question real quick, how far are we buying these options out? About 4 to 6 weeks, okay? So not too far out. And the average hold time that Russell's in a trade is going to be about 1 to 2 weeks, okay? Like I said, this strategy really is about buying singles and doubles and taking those small profits, all right? So pretty impressive stuff so far. It's a really defined strategy. Again, if you guys can hold your questions till the end, I'm happy to get to everybody or try to if we have enough time. But I want to make sure we cover all the specifics here. And then again, if you do have questions that we don't get to, you guys can email us. You can email us, and we'll get back to you with them. Somebody will call you, or even myself. Okay. So let's go over a few of the charts here. We can take a look at the trades, and this will kind of really define and show you guys how we're entering the market. This trade was taken on July 6th of 2016 on XLV. Okay. Trade was at 72.84. You can see here, here's our entry. Okay, so we had a breakout. This is 21 day, this is a 21-day high, which goes all the way back to here, this candle here. Okay, so as the market broke out, you could see this trend has pretty much already been established, which is what Russell looks for. Now we're in this trade for quite a while. I mean, you can see it lasts, well over just about 2 weeks, 2.5 weeks here. Okay, and most people right here, when we get up into this turn, are probably going to be running for the hills. All right, and this is really what separates Russell from most traders out there, is he allows those profits to run and doesn't allow 1 cent of emotion to get involved. A lot of you might look at patterns or different candle formations. I mean, I've looked at every book you can. I mean, you've got these doji candles here, and indecision, you're probably going to start getting a little bit nervous. You've got an inside bar candle here. I mean, the list goes on, okay? And these are all built, and the market makers really build these charts so that it makes people like you and I nervous. So while most people are ditching here, Russell's still in this trade, trying to maximize his profits. And you can see it worked out. We got another breakout, comes back, and then pushes up. Now, at that time, we're almost 100% up in this option. Our profit target is trailing. And when you subscribe to the service, you'll learn how that works. Okay? But you can see we got an exit alert here. We got stopped out. Now, let's say this trend isn't over. Let's say it breaks the highs up here again. We're going to probably get re-entered in on this trend. So we're not going to lose out on this move if it continues to move. Okay, but you can see we did about $119 per contract. So if you were trading 10 contracts on that, which, relatively, I mean, the price for this was only $1.52, so it wouldn't have taken much to have a few contracts here. You would have made some good money on this trade. Okay, let's go on to the next one. It's another great example. Clear 21-day breakout. You can see we take out the highs here. The market trend spikes up. Again, I mean, you see indecision here. The market starts to fall back. People are going to be getting really nervous. So Russell will tell you himself, he has no idea where the market's going. He doesn't try to judge where the market's going based on a lot of the stuff that is pushed out to us on the news or on chart patterns and things like that. And he's going to follow the trend for as long as it's going to go. This ended up resulting in about a $77 per contract traded. So, again, singles and doubles. and you're not in this trade for a long period of time. I mean, you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 2 weeks exactly we were in this trade for a nice profit, okay? We'll go on to another one here. We can take a look. China currency shares ETF, turtle by alert, price was at 35.01. Okay, so this is actually a really choppy market, but we got that nice breakout here, gave back, ended up coming up, but then gave back and took us out. Had a small loss of $5 per contract. Okay, so some of these trades are shorter lived. Not every trade is going to be the home run. You know, but again, if the market is turning, and according to the indicators, Russell's not one to sit there and hope that this is going to continue on. You know, I found with my own trading when I got into this industry, and I thought that I was going to conquer the world in 3 months and open up an account and be a millionaire in about, you know, like I said, a short period of time. I can tell you from my own experience, and then also from dealing with thousands of people over the last 9 years, that it's the same for 90% of them. Your emotions take over. And that's really what was instilled with the turtles, is you do not let emotion get involved. You're going to take it out with this strategy 100%. Like I said, there is no question of whether you should or should not be in a trade, and whether you should stay in that trade or not. As long as you follow those rules, which again have been proven over the last 30 years, you're going to be successful. Does that mean every trade's a winner, every month's a winner? No. But we're going to take a look at the performance on this here in a second. We'll take a look at one more trade. This was a pretty easy one to follow. You can see we had that breakout of this channel right here. Nice manipulation leg down, picked up liquidity, went up. You know, most people would get nervous right in this range here, or cut it short, maybe think that it's not really working out. This was a longer trade. But for better for worse, we stuck it out, and you could see it profited. I mean, we saw a nice gain on this trade. Certainly, if you had a good set of, you know, a couple $100 per contract, you know, you would have made some good money. Okay. Let's go on. Here's the performance summary. Okay. Now, this is a test account based on $10,000 initial investment, utilizing $500 per trade. You can start off with as little as $5,000, and that would give you a max 25% allocation, because remember, you're only in 5 trades at a time at most. On average, you're only going to see about 10 trades a month. So this is not high frequency. This is not something that's in and out of the market every day. Russell has a very defined strategy, and would rather sit in cash and wait for the market to prove itself to him, rather than just being in the market to be in the market. You can see here our total net profit was about $70,245. Now that is non-compounded, okay, without reinvesting one single penny. So obviously if you had reinvested your profits, which you'd be able to do, I mean, if you're trading on your own, you could do it at any time, but Russell does recommend that you use $250 per $5,000 in the account. So, you know, you've got to move up in those $5,000 increments. Now, the max drawdown, which is going to be the most important part, was only $2,600, okay, 26%. That lasted 34 days. That's from equity high to equity low, back up to equity high. Only lasted 34 days, and he recovered that 26% drawdown extremely quickly. Now, let's go down. You can see the total amount of trades was 312. Yeah, this is actual performance. Okay, every trade was taken and in a live account. Okay, you can see the average trade net profit, $377. That's if you take the average winning trade minus the average losing trade. Okay, so your average winning trade's at about $593, and your average losing trade is at about $216. You're at about a 3-to-1 risk to reward ratio. So when you're looking at these numbers, I mean, even though this is really impressive here, okay, what people need to be most concerned about is looking at two things together. The percentage profitable. You're winning 1 out of every 2 trades. Okay, but more importantly, you've got a 3-to-1 risk to reward. I don't care if you're winning 95% of your trades. If your risk to reward is not in line, then and you're that one trade that you lose wipes out your winners, it's not worth it. Okay, because you could go on 12 months of winning trades and then the next month go through a set of losers that wipes everything out. And that's why the money management is so important, and why working with somebody like Russell Sands is only going to benefit you, somebody who's been through this for the last, over 30 years. So you've got that 3-to-1 risk to reward. He doesn't cut it off there. Remember, he does let the winners run. You can see the largest win was about $2,000, so 20% on one trade. I'm sure people could probably live with that, right? And then our largest loss was just under 5%, so extremely small. If we go up, you can see the percentage monthly net gain is about 25%, non-compounded, which equals out to about a $2,500 monthly return over the last 28 months. So if you're looking for passive income, I'm sure we could all live with about $2,500 extra in our pocket, and that's only on a 10K account, especially if I know my losses are going to be controlled. And it's been the percent profitable months is at about 95%. So some months are going to be greater than others. Obviously these are averages. I might be up one month 30, 40, 50%. I might be down 5 or 10% the next month. Overall, over the last 28 months, the strategy has performed quite well. I hope this is all making sense to everybody. You can see this is net of commissions. We paid a $25 round turn and plus $2 per contract, okay, which for full service and auto trade is actually really cheap. But net of commissions, we netted that $70,000. Now, if we had compounded those, which since Russell is a hedge fund manager, I can't show you compounded returns, which that being said, it would still be pretty convoluted, and you'd all think you would be millionaires in a month. If you're starting with a small account, really the first year is going to be about building equity, okay? Getting your 10 or 20,000 up, get up to like 30, 40, 50K, not that much, right? Then we go into year 2, 3, 4, and 5, and you'll start to see more of a lifestyle change. Let's go on to the service, or actually take a look at the equity curve real quick, guys. You can see it's pretty smooth. You do have some flat periods, okay, but you've got that smooth uptrend going over the last 2 years, okay? No major dips, and that's basically what you want to look at. Also, when considering the drawdown, and this is why the money management is so important, unless you drew down 75% or 80% of the account, you wouldn't have to add money into it. And that's where the risk to reward really comes into play, and be able to utilize that same allocation, okay? Let's go on to the service. Yeah, Tim, I'm going to cover the signals actually right now. So you get a full education, auto trade optional, and daily trading signals optional as well. Basically, with the education, Russell is going to send you the full trading manual and all the turtle rules for his strategy. It's full disclosure. Russell gives you his 35 years of hard work up front. You get that in the mail via UPS. You're also going to get a full mentorship with the service. So if you want to learn this, you don't have to, but it comes with it. It doesn't cost a penny more or less. Anytime you have questions pertaining to the strategy or the service, you can call Russell Sands' office directly, and you can speak with him or his team, and they'll answer your questions and break things down for you. They do not charge extra for this, okay? Now, a lot of traders do. They give you the book, and then they charge you $100 an hour to talk with them. Russell's been doing this for almost 40 years. He doesn't need to do it anymore. The guy's worth 50 or 60 million bucks. He lives down in Boca Raton. He could go out and play golf all day for all he cares. But trading's his life. He loves working with people. He's a great guy. You guys will get along with him. He's actually extremely funny. His assistant, Steve, and Ruth, they've been working with him for over 20 years. You guys are going to be really happy with him. For those of you who do not want to learn the service, or maybe you do want to, and you just want to follow along with Russell while you're learning, you can set up to have it completely auto-traded for you at a third-party licensed and registered broker, which is what most people do. Most of my clients go to a company called Halifax America. They clear money through Interactive Brokers, but you can do it at a third-party broker. And this way you can sit back and let a professional go to work for you. If you're retired, you can enjoy your retirement. If you're too busy to trade, this will be absolutely perfect for you. The process is very simple. Russell sends the signals to your broker directly, and they execute on your behalf. You sign what's called a letter of direction. It allows the broker to execute on your behalf. Anytime Russell's in a trade, you're in it with him, exactly. And when he's out of that trade, you're out of it with him at that exact price. So any profits that he has seen on his own account, you are going to experience in yours as well. So everything is done by limit order, to answer your questions earlier. So they are exact entries, exact exits. And just so you guys know, I mean, over the years, we've spent a lot of time, some of the brokers spent a lot of time and money in developing different platforms so that people are able to replicate and mirror this. As far as if you want to trade on your own, you'll receive the signals as well to your email. Those come out about 30 minutes to an hour before the open every day. They are by limit order, so you can set and forget it. Every once in a while, and this is every once in a while, you may get an intraday order, but 99.9% of those orders are going to be in the morning before the open and by a limit. Okay, the only time you would ever get intraday is if we're already in a trade and we get a huge spike. But if you're in a trade, you're going to be watching it anyway, it's all sent over by email. Okay, you get everything. You get what he's trading, the asset, the stop loss, the strike price, expiration date, and entry price is all given. Okay, yeah, you can compound really quickly. Every $5,000 if you're doing the auto trade. So, if you're going to be doing the auto trade, the brokers recommend, and so does Russell, utilizing $250 per trade for every 5K in the account. So, if I start with 20K and in 1 month I do 25%, there you go. I can already compound at that point. And that way you're able to withstand the drawdowns or any losses and trade at the same level without having to add money or without erasing profits and going back to the level you were at before. So you don't want to do it too quickly, but again, it's your money. You can do what you like, with something like this, you definitely can build that account fairly quickly. I mean, I've watched people, over the years trading options and Forex take 5, 10, 15, 20K accounts, double, triple them within a couple of months. I mean, it really depends, obviously, what's going on in the market. Under the current market conditions, I mean, we're starting to see some really good volatility. And I think as we get closer to this election, we'll start to see some substantial trends. And, the headline was taking advantage of an economic collapse. The strategy has that defined entry strategy. You can imagine if we're getting new lows over a 21-day period and we're getting entered on that breakout and the market is falling off, those are years you're going to see tremendous, tremendous gains, okay? To kind of give you an example, Russell's futures products back in 2008 did 600%. His Forex strategy did 500%, and that's non-compounded. Okay, so in those types of markets, we're excited for it. We can't wait for it, and we're probably coming up on one right now. All right, so who's got some questions? Q&A. Anyone? I guess I did my job right. Tim, I hope I answered your question. How do the signals come over? So basically, they're going to come over by email. Everything is done by limit order, okay? Meaning you can set your limits. Now, that doesn't mean every day there's a signal. Again, it's only if the markets are hitting the criteria to get into a trade, okay? So, if we're reaching those 21-day breakout criterias, that's going to come over. No, Matt, you do not need to be logged onto your computer all day, every day. Literally, I follow Russell. It takes me 10 minutes in the morning. You get the signals. They come over. It's extremely simple and very definitive. If you are going to be trading this on your own, I am going to get you in touch with Russell and his office so they can explain the verbiage on, even though you guys are all pretty smart, but make sure you understand it. Yes, Lawrence, you can trade this in an IRA because all it's doing is buying directional calls and puts, which most of my clients actually, set up multiple accounts. They trade their IRA or their wife's IRA or utilize their own, cash accounts. If you have a 401k that isn't tied to your employer and is self-directed, you could roll that into an IRA and utilize it. The benefits utilizing an IRA is obviously, most IRAs out there are only going to do about 6 to 10% a year on a good year. And a lot of my clients have felt comfortable enough to use small portions of those IRAs, given the money management and risk management. When we sign up, do we work with you directly? Yes, with myself or one of my team members here. But then you also get to work with Russell and his trading team. So you've got a lot of support, and then also a broker as well, who the brokers have been trading with Russell for years. They understand the strategy. So if you do the auto trade, they're extremely helpful. They're really hands-on, and so are we. I'm not a financial advisor here. I'm not the trader. Okay, Russell is. That's his job. So his job is to make you money and to teach you the strategy. My job is to make sure that we handle the customer service, but we also utilize these. So anytime you have questions pertaining to the strategy, pertaining to the markets, or even if you just want to chit-chat and tell me how your kids are doing in school, you could call me anytime. So, like I said earlier, this is my life. I get to share it with people. And I think you said that the actual performance data that we get, yes. I don't understand the question, Arb. What is that? So, Arb, can you repeat your question? Okay, well, if you're asking if the performance data was actual, yes, it is. So, yeah, every trade was taken. And then when you're following along with Russell, when he's taking a trade, he sends out those signals and you guys get those, okay? Do we have any other questions? Okay, no problem, Mark. So yeah, show of hands. I'm sure, I'm wondering, how many people want to sign up. Just so you guys know, we are offering a 50% discount on the strategy. Okay, and then anybody who signs up, the first 5 that sign up will go ahead and get an extra year for free. So instead of a 12-month subscription, the first 5 to sign up will get 24 months. Here's our contact information, okay? You can call our main line at 1-800-883-0524. Or you can reach us locally at 832-404-2420. You can also go to our website, farnsfieldresearch.com. If there are any other questions, feel free to give us a call or email us at support@farnsfieldresearch.com. All right. Glad to see you guys on here. I hope to see you guys next time. And I look forward to working with you guys. Everybody have a great day. Thank you.